and I would like to read out what it is exactly about. It's exclusive market intelligence briefing session, India SatCom Outlook 2035, demand capacity, competition and growth opportunities. India's SatCom market stands at a critical inflection point. This session examines connectivity gaps, market disruptions, evolving regulations, and emerging opportunities shaping the next phase of sustainable growth. Discussions will also explore satellite capacity dynamics, pricing trends, demand across key user segments, startup participation, and the convergence of satellite and terrestrial networks. And here we have our two esteemed speakers. I would like to call them over to the floor. Mr. Vivek Prasad, founder and CEO of SatNxt. Is it? Please come and join us. Can we have a round of applause? I know it's a less audience probably. If you want to move ahead in the front tables, that will be great too. And I would like to call the other speaker to join him is Mr. Ashwary Pachauri, consultant to SatNxt 2. And over to you guys, and you can take it forward from now. Thank you.
Hi everyone. Today we'll look into the India SatCom market outlook 2025 to 2035. Obviously, India is undergoing a major transformation. Massive amount of investments have been made across different space industry segments. But in this presentation, we'll look into the market from the SatCom and connectivity perspective. So what is the market landscape? Which is the area where the opportunities are evolving by application, by frequency band, by orbit, and then how the price evolution is happening across different use cases, and who are the key players with capacity over India, and who have the license to operate over India. So all of those dynamics we'll look into as we go through the presentation. So we'll start with a slide like what is SatNxt and who we are. So we are a team of consultants we have a lot of industry experience. You can see our experience ranges from 5 years to 40 years. We are globally distributed. So we have our team member who is ex-MIASat in Malaysia. We have our team member based in London who are from satellite operator and space industry. So within the team, we cover end-to-end space industry expertise from system manufacturing, satellite operation to downstream services, including ground segment market as well. We have done 100 plus projects across different industry players, starting with space agencies like NASA, ESA. Personally, I'm an ex-ISRO scientist, so I've worked on 7 satellite missions in the past and supported different satellite operators starting SES, Intelsat, Eutelsat, Thycom, Pacific, MIASat. And currently we are working with different operators and service providers and developing our product and solution, which is very much suitable in terms of how the market is evolving and what are the areas where markets are evolving. And the below bullets which you see are our strategic themes that we cover. Starts with multi-orbit architecture, and we cover direct-to-device market, government and military use cases, then 5G and telco, convergence market, AI in SatCom, and then other similar segments. So now that we have looked into our SatNxt introduction, we'll start with India, what is the opportunity and how it is segmented across different use cases. Clearly, in terms of our internet penetration, around 72% of the population are connected with internet, but that also leaves some majority population, that is around 400 million plus, which are still unconnected. Obviously, SatCom presents a very good solution, but especially in the remote areas and especially areas where fiber networks are not, business case doesn't close for the fiber networks. And that gives rise to the opportunity in two major markets. One is consumer broadband, another one is backhaul and trunking. What we have seen is consumer broadband market across the globe has been disrupted by Starlink. And we have seen prices like European prices. If we see, it has normalized around $30 to $50 per month subscription for 100 Mbps connection, and lower part of that spectrum, we have seen the prices have gone as low as $10 per month in Africa, that is Kenya. We expect the prices in the consumer broadband market to be somewhere in between what we are seeing in Africa and Europe, considering all the regulatory challenges and other aspects. In addition to, and on the backhaul and truncate side, I would say that every time there's a network upgrade from 3G to 4G, 4G to 5G, and then 5G to 6G, we see step change in terms of bandwidth demand for backhauling and for trunking. And hence, that 400 million plus number, what you see, unconnected population will create major demand in the consumer broadband and backhaul and trunking market. There are other areas as well where the opportunities are good, and operators and service providers can target better ARPUs and better penetration. Clearly, the government has deployed the BharatNet program connecting remote areas, and around 55,000 sites are connected. We see around 1.47 million schools are present in India, and internet is one basic need. We have done like there are multiple projects that we have done with, for example, one project we did with World Bank, and they were looking to deploy internet connections in Latin America and Africa, very remote regions, and it is very well validated on many occasions that the moment internet penetration happens in an underserved regions, the socio-economic development of that region completely changes within 3 to 5 years. So we see a lot of opportunity across education and healthcare, connecting health centers. Around 30 to 40% of the health centers still do not have internet. In terms of school, around 50% of the schools, especially government school in remote areas, they do not have internet. Government and defense market, considering the geopolitical scenarios which is happening, we are seeing across the globe increased investment in the critical infrastructure for government and military use cases. So this market in terms of terminals are less, but it generates high ARPU revenues. Next is enterprise. There are various types of enterprises that uses VSAT applications, starting from banking, ATMs, so to retail and hospitality sites, remote resorts, and then in the energy market, oil and gas mining and utilities segment. One example I would like to give is the Shell fuel pumps you would have seen. So they uses VSAT network, and now they have expanded to the retail outlets. So within the Shell fuel pump, you will see the retail outlet. So the operational use cases, they are integrating using VSAT satellite internet, even within India now. Mobility is again another key major market. Around 850 Indian flagged aircrafts are there, short haul and long haul combined. There are clear trends that the end user or the passenger expectation is to have similar internet as they have on ground. And there are airlines across the globe like Delta and others who are implementing free Wi-Fi across their fleet. And similar opportunity we see within India as well. And the next one is in the maritime market. Around 1,500 Indian flagged vessels exist, and for crew welfare, or in case of leisure for passenger welfare, everywhere internet is required, and already Starlink is deploying these services, and even the service providers are offering multi-orbit and Starlink solutions globally to different vessels, and similar opportunity can be capitalized within India as well. So that was about the addressable opportunity within India. But in terms of supply, if we look at, we categorize satellites into three categories. One is the wide beam satellite, which is our typical megahertz satellite that targets the video market. And the next is the spot beam, which is the next gen satellite, where Mbps or Gbps are sold. And the third one is the LEO disruption that we'll talk about. The first one is the wide beam capacity supply. Clearly, this market at present around 538 TPEs are existing over India region, and around 112 satellites are there over India region with beams, either partial or full beams over India. But this 112, they cannot serve the customers because of regulatory approvals and other factors, for example, Asia-Sat and other Chinese operators. So only less than 50% of the satellite have the authorization to lease capacity over India. The major contribution, clearly, if you can see the market share, the major contributor obviously is NSIL, and the top satellites contributing maximum TP is transponder equivalent, 36 megahertz transponder equivalent are GSAT 15, 16, 17, 18, and 24. So this market is declining and will continue to decline. Clearly, the fleet which is existent is aging, and operators do not plan to uh, replace this fleet, because here the target market is video, and video market, video especially DTH market, which consumes maximum of these capacity, is declining because of the competition from the OTT service in improving compression ratios and declining capacity pricing. Yeah. And hence, the operators have also matured and they are moving towards the spot beam kind of capacity. So although wide beam geo market is declining and eventually become very small, on the other side, the HTS market is growing, and still operators are committed to the geo HTS solutions over India, over Asian markets, especially India. We have seen like multiple cancellations from SES and Eutelsat. They have cancelled HTS satellite, but not over India or Asia region, because it is still relevant. And in terms of capacity supply, around 115 Gbps supply is existent over India. Major 80% of that comes from GSAT platform, that is NSIL. So currently majority of the supply is governed by ISRO or NSIL, I can say, but eventually looking at the trends and the future satellites which are coming with the beams over India, it will be dominated by the private players. The major satellite which will contribute to this step jumps at different period of time are Viasat 3 Asia satellite, which is around 1 Tbps capacity satellite over Asia, and a significant portion of that will have throughput over India. The second one is GX9. Then FlexSat Asia, FlexSat America is cancelled, but Asia is still active and live. Thaicom 10, and then the recently announced AnandSat 1, which we expect to be launched around 2028-2029 period. In terms of frequency band, obviously Ka band will dominate the capacity supply throughout 2025 to 2035. Now, next is LEO. This is the segment, the LEO market has significantly disrupted, we all know, across the globe, across different use cases, price, massive amount of surge is seen. And similar to that, what we did is we looked at all the satellites, how many satellites at a time is there over India across different constellation, what is their plan, and we aggregated all those supply, and around 4.8 TBps of the total supply exists over India, majorly dominated by Starlink at the moment, but this supply is going to ramp up to around 14x, which is 69 Tbps by 2035. 99, comparing Geo STS and LEO market share in terms of supply, by 2030, around 99% of the total supply over India will come from non-Geo. And Starlink and Amazon Leo will be the top drivers for this trend. In terms of commercial launches, we still do not have any commercial launches, although players such as Starlink, OneWeb, and O3b mPOWER have got authorization, but spectrum allocation is still pending and it is getting delayed. So the first three slides we saw is about the supply landscape, who is having how much supply and how the supply is evolving over India. Next, we look into the demand. So clearly, the demand for the wide beam was driven by video and backhaul market, but the video market is declining and hence the demand is also declining. On the backhaul and trunking side, we are seeing rapid migration from wide beam megahertz type of capacity to Mbps, Gbps type of capacity. And that is the reason why we estimate that the decline, especially the decline will be faster starting from 2028 to 2029. And the trend will follow enterprise. Within India, we have around, at the moment, around 250K to 300K terminals deployed across different use cases, retail, hospitality, energy, banking, all of these markets. But eventually we see all of these sites will be migrated, because for the enterprise market and for other markets as well, we are seeing that the bandwidth demand per site is ramping up, and the price suitability is better for using the STS solution than the wide beam solution, and hence the migration will continue and the demand will decline to, it is estimated that the total demand in wide beam will decline to 76 TPs by 2035. So the next is the STS demand. We have split it by Geo STS versus non-Geo STS. You can see the data is segmented by application, and the opportunities that we see is new markets are going to open up because of reducing pricing. So lower pricing will unlock larger demand because we have larger addressable market, and hence the Geo market is going to have, in terms of demand, is going to have an attractive opportunity both for LEO and Geo. Non-Geo, which is LEO and MEO, if there is more delay in terms of their deployment, some of those demand will be capitalized by the Geo STS players. That is what we expect moving forward. And in terms of numbers, if you see, we have estimated around 24 Gbps data is consumed primarily at the moment for backhaul and trunking market. And consumer broadband, we include not only connecting households but also Wi-Fi hotspots, whatever is consumer class network which is not part of the SLAs and others. So that is being quantified within the consumer broadband. Small percentage of consumer broadband are connected right now, but that will be the second largest market for the Geo STS, but the first one will remain backhaul and trunking market. In the non-Geo and STS, clearly consumer broadband will be the prime winner, considering the price and bandwidth and ease of installation that it offers. Yeah, so that was, the last side was the demand, but in order to unlock that demand, pricing has to be one of the key factors, both at the wholesale level and at the retail level. So the chart which you see on the left is the wholesale pricing, which is the transaction between satellite operator and service provider, and the chart on the left which you see is the retail pricing, which is the transaction between the service provider and the end user. We are presenting non-Geo pricing because at the moment Geo pricing, Geo STS pricing is significantly higher than this, but today's Geo pricing is not going to be the Indian country price. once non-geo is launched. So the operators or service providers who are targeting to enter or deploy their services, they must use non-geo pricing trends across different application in order to have a sustainable and long-term successful businesses in the future. Clearly, you can see like different trends across different applications. For example, in government and military retail pricing, there's a dip and there is, again, you see a rise. It is because we expect that the non-geo will enter government and military market initially for the non-critical use cases and gradually enter into the critical use cases where the higher ARPUs will be generated. But bottom line is consumer broadband being the major market, we expect the price. We are already seeing the price trends in the region lower than $100 per Mbps per month at the wholesale level, and we expect once non-geo enters into the market for consumer broadband, it will go as low as $20 per Mbps per month. And the ARPUs, again, I said that consumer broadband will be lowest. And then enterprise, there are different types of enterprises. So again, there is a long variance. Like banking ARPUs are different than energy market ARPU. Energy market ARPUs are significantly higher than other use cases. Mobility is again going to be one of the key market, which has aviation, maritime, and land mobility. Land mobility ARPUs and wholesale prices will be lower. Aviation, we expect it to be the highest, and based on the penetration, we get this increasing and decreasing trend across the wholesale and retail pricing. So coming to the last slide, obviously there are mixed trends across applications. We have evolving demand, like one side wide beam is declining, STS is ramping up, and pricing, again, it governs as the prices go lower, it impacts the wholesale revenue. This is the wholesale revenue, this is not the retail revenue. So this is the transaction between, as I said, between satellite operator and service provider. So we did the analysis by application, and clearly video market contributes. India is a majorly video market at the moment, but as we move towards the end or towards the mid of the forecast, the network markets will start dominating, and eventually the network market will contribute to around 90% of the total wholesale revenue, like capacity leasing revenue across the India region. So cumulatively, if we see an opportunity for 6.3 billion. It is an aggregate opportunity. Currently, at the wholesale level, the market stands at around 300 million US dollar. It is going to ramp up to around 900 million US dollar at the wholesale level, and the majority of the demand moving forward, as I said, will be addressed by backhaul and trunking and enterprise, because enterprise and backhaul and trunking have relatively higher ARPU than consumer broadband. Over this, if we look at the retail revenues, depending on the margins, the landscape will change. For example, government and military will generate higher revenues per site versus consumer broadband and enterprise. And similarly, enterprise will generate higher revenue per site with respect to backhaul and trunking. So the bottom line is India has massive opportunity within the SatCom market, but looking at all the trends across application, frequency band and orbit, it is important for the industry stakeholders to navigate appropriately, build their pricing strategy, looking at the future prices which is expected, look into the target application where the opportunities are more, and at the same time balance the opportunity size versus margin size. Because if you look at consumer broadband market, it is a low margin market versus a commercial mobility market. So appropriately plan your capacity for your satellite which you are launching or planning to launch or you are leasing, and you need to look into different aspects of different use cases and appropriately plan your deployment of services. Thank you. This is all from our side. We do a lot of analysis at the country level. We have built the industry's first SatCom data hub, which covers country level data resolution for 65 plus countries, split by application frequency band. So, and the market share. So by operator, you can see who is having how much in which country and at what price, average prices the solutions are deployed at the wholesale and retail level. Yeah. Mhm.
type of over India. What and another slide it was mentioned, I think 24 or 25 Gbps is being used.
Mm.
So between the availability and uses is around 80 Gbps gap.
Yeah, because not all satellites have got licenses to operate. When we look at the supply, it is aggregate supply of all the beams over India, because when we do the forecast, we understand that some of the operators or satellites do not have license
Yeah,
at
but
this moment, but moving forward, they might get license.
yeah, but majority of capacity under HTS what I see was from NSIL.
Yeah.
So which anyway have a license.
Yeah, yeah.
So what I wanted to understand
Which
in
slide?
the I think second slide
uh,
further.
capacity.
Can you go back? Yeah, here. So if you see the 4x where you mentioned 115 Gbps, now most of the capacity probably might be from NSIL.
Yeah.
So what I'm trying to understand, and
So
you are drawing that going forward is still the capacity will be
supply.
increasing.
This is the
The
supply.
supply will be increasing. In the today's scenario, when out of 115 Gbps, the utilization is around 10 to 15 Gbps, then
No,
what
I
will
just-
make any operator to further expand the capacity when the today usage is less than 20-25%?
so,
Yeah, exactly.
So around out of 116, around 24 Gbps is consumed, and around 115 Gbps, 80% is NSIL, which has the license obviously. But if you look at the STS architecture, and if you look at all the satellites, be it Jupiter 3, be it Eutelsat VSTS, everyone has very low fill rates. And the similar case exists even for India. Now only the sites are being deployed, and that is why you see a very low fill rate, 20 to 30%. And we have done the calculation and looked into different satellites. The highest fill rate that we expect that HTS will, because here spot beams are distributed. You cannot focus all the bandwidth onto one spot beam where the demand is. So it is distributed. So typically, I've spoken to different satellite operator, what is expected out of an STS satellite is of the order of 50 to 60% fill rate is a good fill rate. But we are not there yet. Even for NSIL satellite, we are at 20 to 30% fill rate. But yeah, since because the deployment is happening right now, so we expect the fill rate to ramp up even for NSIL satellites up to around 40 to 50% soon. Yeah, yeah, you can just, yeah, yeah, sure. Yeah. Yeah.
My question is on this slide, particularly around consumer broadband, right? Now, at a country level, when you aggregate consumer broadband for both NGSO and GSO, it is what coming around, if I'm not wrong, at least around, that's in TBPS, right? So 1.5
Yeah, yeah.
TBPS plus another TBPS, right? Probably somewhere around 1.8 to 2 TBPS of consumer broadband demand alone, right? Now, but when we further slice and dice this, right, there will obviously be competition from terrestrial alternates to play into this market. Within India, where do you see this consumer broadband getting landed in terms of translatable demand?
Yeah, in remote areas like remote islands, we see Wi-Fi hotspots deployment, like HughesNet has deployed in Mexico, where you have a terminal deployed and then the network is being used by more than one user. So that type of solution we see initially, but eventually as the prices go down, wherever fiber networks are not as reliable as the urban population or the urban regions, like across mountain regions, in the northeast regions, across different islands. So we see their con- consumer broadband market penetration will happen. And in addition to that, if Starlink enters because of its brand value, we see that even in what do you say, for outer regions of the major city also, we'll see some of the deployments. And still, like 2 Tbps also is a very small number. When we see the population 400 million and you convert it into number of household, considering around 3 to 4 members per household, still we have 100 million household, but we don't expect more than 200K or 400K deployments. So still it will be a fractional penetration in comparison with the telco players, how many subscribers they have. But for the SatCom, it is a major opportunity and a major market because our overall size is small.
The reason I wanted to ask it and double click on it further is because Government of India data on gram panchayats that have last mile connectivity to fiber, right? And BharatNet next phase, the claim is that almost 99% of India will have fiber connectivity, right? In that context, where do you see, I mean, do you still see when, and this is a 2035 projection, right? And in another 8 years, when our fiber is going into northeastern states, to the Himalayan states and everywhere, do you still feel that there will be a role for consumer
Yes,
broadband?
absolutely. If you see US and Europe,
That's what I wanted to ask. Are there
they
any
they
global
have good
parallels?
internet deployment, good fiber net deployment. Still, like US has more than, I think, 2.5, 3 million subscribers. So there are still users. For example, I will use Starlink. The moment Starlink comes, I'm based in Bangalore, because every second day the roads are dug and my fiber is cut, and I have interrupted connection. So it's not only like the internet is not available or somebody is unconnected. If somebody is looking for a reliable solution, they are ready to pay like $20, $30 a month.
Thank you.
Yeah, thank you. I've got a question about the sort of the fifth slide from the end that shows some ARPU trends. Could you go back to that one? Do you think I'll recognize it immediately when I see it? Yeah, that one there. Okay, so that the line, the sort of brown line on the right-hand side, going up to 1,400. Is that government and military?
Yes.
Okay, fine. So why do you think that the pricing is going to be going up? I mean, well, that's not pricing, that's ARPU.
Yeah, in terms of ARPU, we see two trends. One is within the government and military application, initial deployment will be for non-critical application. And then the next level of implementation will be in the critical use cases. And in the critical use cases, since because additional layer of security is added, hence the ARPU also goes up. Second trend what we see is, as we move along the timeline, the consumption, that is data consumption per terminal, also ramps up. So if you have seen the existing deployment trends, the base subscription is bought initially, but gradually higher and improved high performance subscription is procured. So based on that trend, that increasing data consumption per site, and then the second trend is inclusion of non-geo terminals within the critical infrastructure of the military use cases. It has two parts. One is civil government and another one is military. So military starts dominating, and that is why you see the increasing trend.
So, okay, I still don't understand. This is a mean average revenue per user. per month, presumably. And if they're going to be increasing usage and number of users, then the mean is going to come down rather than go up. Second issue is, why would the government and military guys pay more than double over a period of 10 years when efficiencies would imply that they will be able to have a lower ARPU, and also they would say, sorry, we're not going to pay you that much?
Yeah, because military, and so as I said, it has two parts. One is civil government, which will have initial penetration, and military will start using at the later stage. So since because there are two sub-segments to it, one military weightage of military will be smaller for the initial year, and then the weightage of military will start increasing compared to civil for the further years. And that is why the average ARPU which you are seeing is higher. It grows. So if you further split it, just look at military ARPUs, it will be declining. If you'll see only civil government ARPU, it will be declining.
Okay, don't see that at all. Anyway, okay. Yeah. The other question was on the, I think it was the slide before that when you were talking about, can you just go back one if that's possible? Yeah, no, go that one, yeah. So that's capacity supply. How did you measure that over India for NGSOs?
So we look at all the non-geo satellites, operating non-geo satellites in different shelves, and how much is their throughput across that covered Earth surface. We know India's surface area, and then we again we put certain biases because some of the beams, some of the satellites will be skewed if there is demand over India, and then we calculate like taking the ratio of for each cell within the Starlink constellation. For example, what is the total throughput and what is the surface area at a given point of time it is covering, and we have India surface area. We divide that, take that ratio to arrive at how many satellites are looking over India at the moment, and we know how much throughput per satellite is there, and we calculate for every region and every country.
Right, so you're making an approximation, not unreasonably, say India is 1% of the Earth's surface, and so you're taking the total capacity divided by 100. What assumptions are you making on the number of gateways and on the on cross links?
Yeah, so gateways we have not covered now. So we, based on different use cases, based on regulatories, we estimate how many number of gateways and where that gateway will be required, considering the throughput and other variables. But at this moment, we have not covered that in our presentation.
So it's gross capacity rather than available capacity. Let's just, for example, say
Correct.
there's only one
it is
gateway.
Theoretical aggregate capacity considering all the satellite beams over India at a given point of time.
Okay, thanks.
Yeah, thank you. Yeah.
And underutilization, it was mentioned max 2 TBps will be utilized as per the maybe analysis. So out of 70 TBps available capacity, it's a 2 TBps only will be used.
Yes.
What is the reason behind that once
so
you have enormous capacity?
Yeah, so this also includes constellation like Chinese constellation, Thousand Sails and Guam. That is one reason. And second reason is non-geo capacities fill rate are significantly low. They have massive throughput, plus the approvals which Starlink has got is for limited GBPS. Obviously, it will get ramped up as once they reach that number. And we although the supply is there, we don't assume that the supply will get converted into the demand until unless there is a clear opportunity, clear trend, and clear industry pointer. And if you look at 1 minute, Praful, yeah. And if you look at global trend, also Starlink fill rate is around 2 to 3% only. Obviously, it considers like much lower fill rate over ocean, but globally it is around 2 to 3%, 4% only. Yeah, and that is what is happening, right? So you have to see how many. Uh, this is the case of supply versus pricing game. Eventually, you need to achieve best revenue, right? And even if they reduce $2, how much is being licensed, how many they can deploy. At the same time, there is an equipment also which is part of that, and that is also that also has $100 $200 cost to it. So based on that, and this is exactly your question, this is the trend what we have seen, that massive supply is deployed over a country or a region, and they have started with a price, and they are unable to break that market at that price. Gradually they lower it. They just don't slash it to like $2 or $3. But yeah, when with the current supply, which is around 4.80 bps over India, and similarly if you can extrapolate for the globe, with the current supply and around 10,000 satellites in orbit, we are seeing $10 prices. So $2 may happen by 2035, yeah, obviously. Okay. Yes, sure. So, so as I said that we do a lot of analysis, and if you guys have any question, you can write to us and we can have the conversation. Or if you're looking for any insight, any data, our team is there to help, and we have good amount of expertise and depth across different segments of the market, and we are here and we are happy to help grow Indian ecosystem for sure. Thank you.
Thank you so much, ladies and gentlemen. I think that was it for today for this track 3. I think you all can join the roundtable discussion which is happening at the Sovereign Hall. And tomorrow we meet again at 11 a.m. For day 3, the final day. It's a house full tomorrow, so look forward to seeing you all. And there's tea, coffee probably opening up in a couple of time. Thank you so much.